Hi ladies and gentlemen, this is Game of Trades and this is going to be a technical analysis of the S&P 500. So do I think that we've put in a top? It certainly could be. It's the very limit of what I expected the rally to be. When we had a long trade going from here to this level right here, I specifically said that the 272 level was my upper limit for the bull trap. I said for investors willing to go all the way through with the bull trap, the 272 level was a great reversal point, and anything above that would just be hysteria. And that's what this is. This is absolutely hysterical. With everything that's going on right now, the unemployment numbers absolutely skyrocketing. You can see this chart is just mind-blowing. The majority of the world's biggest economies on a complete shutdown. And just yesterday, you can take a look at this chart, we had the retail sales drop to levels that make the Great Recession look like absolutely nothing. I mean, this stuff is very serious. This is, in my opinion, worse fundamentals than the Great Depression in 1929. Now, of course, I could be completely wrong about this. Like any analysis you find on the internet, it could be completely right, it could be completely wrong. So if you think that the Fed will save the market and that we're in a new era where the Federal Reserve can just bail the stock market out at every slight downturn, then go ahead, aim for the all-time highs and ride this bull market all the way up. We'll never see a bear market again. You can go all the way to the 10,000 point level. It doesn't matter. Now, I do not think this. I think we're still in a bear market, and I think there's more downside to come, much more downside to come. I think we're going to retest these lows. That's what I've been saying since I called for a bull trap right here. I said we've put a temporarily low in the stock market, but we're very likely to see a retest of it. Now, I saw a few interesting comments in the comment section. By the way, leave a comment below to let me know what you think of this video. I read all the comments, both positive and negative, as long as they are respectful and polite. I love getting your feedback on the videos. And I got a few comments asking me what it would take for me to become bullish. What would I want to see for me to start thinking that we're heading to all-time highs? And that's a question I'm going to answer in the first part of this video. Before I do so, don't hesitate to drop a like. It does take some time to prepare these videos. It is greatly appreciated. Now, the first thing I'd like to see is a lot more work on the technicals. And what I mean by that is I want to see a more reasonable, I want to see a more steady uptrend with more consolidation, more pullbacks along the way that starts to form some type of a steady uptrend that heads in an upwards direction. I do not want to see hysteria. I do not want to see excessive moves up. This is not what is going to make me bullish. This move here, this is a 16% move in the stock market in 11 days. This is absolute nonsense, and this is not what's going to get me to become bullish. And to explain this, I'm going to show you 2017 here. This was the market in 2017. And you can see here we had a huge uptrend, a huge move up in the market here. When I was trading back here in 2017, we saw this move up. It was starting to get overbought on every time frame. It was absolutely hysterical. And guess what happened? We saw a move down. We saw a huge, huge move down. This is not what you want to see if you want to be bullish. This is what you want to see. You want to see an uptrend with higher highs and higher lows and a steady grind up. So this is the kind of technicals that could potentially make me bullish right now. So let's get back to the current day. I also want to see a lot of work on the fundamentals. We got the stimulus package back here, right? We got the stimulus package here a few weeks ago. And so this entire move up so far has been speculation that the stimulus package is enough and that it will be distributed perfectly so that we do not see a period of economic instability. And so what I want to see is proof that that's the case. I don't want to be speculating. I want to see actual proof. I want to see businesses opening back up, just like they were before. I want to see unemployment get back down to the same level we were before. And if that means I have to wait a couple weeks and miss out on some of the gains that we're seeing here, that we could see in the future, well, so be it. I am not going to put my hard-earned money into the stock market based on pure speculation that the Fed will save us. That would be called fear of missing out, and I will not partake in that, a concept that traders absolutely need to understand to be profitable in the long term. You have to stay true to your own convictions and not just go in the same direction that the market's going. That did not work out for anyone who shorted right here, and that did not work out for anyone that went long here. So now back to the actual technical analysis. I'm going to clear this chart and we can move on. We're going to take a look first at this particular candle here, this green candle. When I saw the close the other day, I immediately thought that this could potentially be a top in the market. Again, I could be completely wrong. Do not trade based on my videos. I feel like that's something quite obvious that needs to be said based on what I've seen in the comments section. But this could be a potential buying climax, and what that is excessive upside, an excessively green candle after a large move up. And what that does is leave an opportunity for the smart money to get out. They see this hysterical move, this hysterical candle, and they get out of the move before it reverses, and it gets the dumb money into the market because, again, of the fear of missing out. They see a big green candle. Oh, the stock market must be continuing to go up forever. Now, obviously, we have to have follow through to prove that this was actually a buying climax. So we need more downside, potentially a break of the 272 level to prove that this was an actual topping candle. And this works both ways. You can see here in 2018, we had a selling climax here. This was a selling climax right here. Another big red candle closed all the way at the bottom, and the smart money gets back into the market and the dumb money gets out because of the fear that it's going to go lower. So now again, let's get back to 2020. I'm going to show you the levels I'm looking at and my trading strategy in the scenario where we begin the move down. So the main level I'm looking at is the 272 level. Again, this is considered to be a bullish breakout. This was a level many people were looking at for a reversal. We didn't get the reversal, so this is a bullish breakout from the bullish standpoint. Now, if we break back below this level, that bullish breakout will have failed and we'll start seeing some selling into the next levels. That is something I covered in detail in my last video. Now here I have a few targets on the way down that I am looking at for potential day trades, active trades. These are all levels I do expect some type of a reaction, some type of a bounce, at least on the hourly chart or even on the daily chart. So as we hit each target, I'm going to be lowering my stop losses to book profits along the way down. And if these stop losses are hit, then I'm going to be looking for re-entries at resistance levels. And this was our trading strategy for this move down. It worked out perfectly, and for this huge leg down as well. Now if we start breaking below this final target, this final active trade target will likely again see a retest of those lows. There is a 238 level that is significant, but again, I think that as we go down, the selling will get more and more aggressive and will likely blow past these levels, these support levels, and get straight to retest this low. Now, if you're more of a long-term swing trader and you just look at the daily and weekly charts, so you could short on a break below the 272 level right here, and then you can have three targets. This one, the 245 level, the retest of this low, and then the 2015 support level that I've talked about extensively on this channel. Now, obviously, it doesn't have to be a straight leg down like we saw here. It could be, again, a multi-week trade, testing each of these levels and getting minor reactions along the way down. It's very difficult to say how aggressive the selling will get. I think we could definitely see another scenario like this. It really is very difficult to say for now. Now, I do have one more thing to talk about, one more bearish potential sign that I've seen on the charts recently. I'm going to clear this chart quickly. You can see this candle is what resembles a potential island top reversal pattern. This is a pattern I talked about a few days ago. I said that I could potentially see a topping pattern like that for this bull trap. And so if this is the candle that puts in the top, then it definitely looks like an island top reversal. And I'm going to show you on the hourly chart exactly what I mean. You can see here we gapped up on the final move up. We had a few candles here at the top, and then we gapped down. And here you can see exactly why it's called an island top reversal, because it looks like an island. And so what you need for this pattern to play out is follow through. We do have what looks like the beginning of the follow through, but we don't have a solid downtrend yet. So what I'm really looking for is a break below this low here, and I think that's gonna be the catalyst for a move down past the 272 level. And so this could be a trade for a more active trader looking at this particular low. Now that's about all I wanted to cover in this video. I hope you guys enjoyed. If you did, don't hesitate to drop a like and subscribe if you haven't already. In the meantime, good luck on your trading and see you next time.